What tax benefits do agricultural easements offer? Imagine turning land preservation into a smart financial move. That's exactly what agricultural easements can do for landowners and investors. These agreements restrict development rights to keep farmland in production. But they also come with some notable tax perks that can make holding onto land more financially appealing. When a landowner donates an agricultural conservation easement to a qualified organization or government agency, they may qualify for a federal income tax deduction. If the landowner earns more than 50% of their income from farming or ranching, they can deduct the easement's value up to 100% of their adjusted gross income in the year of donation. Non-farmers can deduct up to 50% of their adjusted gross income. Any unused deduction can often be carried forward for up to 15 years, providing ongoing tax relief. This deduction is considered a charitable contribution because the easement is donated permanently, meaning it runs with the land deed forever. Many states also offer additional incentives. Over 14 states provide specific tax credits or deductions for agricultural easement donations. These incentives vary but are designed to encourage landowners to preserve farmland, making easement donations more attractive financially. In addition, agricultural easements can lower property taxes. Because development rights are restricted, the land's fair market value for non-agricultural uses drops. Some states requiring local assessors to consider easement restrictions when valuing property, which can lead to lower property taxes. However, this depends on local laws, and in some areas, property taxes only decrease if the land is enrolled in specific programs like the Williamson Act in California, which is separate from easements. Another significant benefit is in estate planning. Agricultural easements can reduce estate taxes by excluding up to 40% of the land's value from taxation, with a cap of $500,000. This helps families keep farmland within the family after inheritance, easing the tax burden on heirs. To qualify, the easement must meet certain conservation goals and be donated to a qualified organization. Because easements restrict land use, they typically lower the land's market value compared to unrestricted land. This can make farmland more affordable for farmers and investors focused on agricultural production rather than development. It also helps preserve the land's agricultural character over time, aligning with long-term investment strategies. For farmland investors, these tax benefits can be a key part of a balanced approach. Donating easements can provide immediate tax deductions, while combining them with state credits boosts overall savings. Careful planning with tax professionals can help navigate the rules and maximize these benefits. Using programs like the United States Department of Agriculture's Agricultural Conservation Easement Program can also increase chances of receiving financial support for land preservation. In short, agricultural easements offer a mix of federal and state tax advantages, property tax reductions, and estate tax benefits. These tools support farmland preservation and can be a smart addition to investment strategies focused on sustainable long-term land use.